There has been a lot of time and money spent convincing the younger generation that it makes more sense to rent. I think if you were to take some time and dig into that and figure out who's doing this, it's the people who have a vested interest in keeping you as a renter. Welcome back. I'm Charles Lewis, the Austin area realtor, who brings you topics and discussions that will help you make better decisions when you buy, sell, or invest in real estate. This question actually came to me from a buyer who was concerned about what home values were going to look like in the future. This individual had $75,000 available for a down payment and was weighing the advantages and disadvantages of paying $2,500 a month in rent versus buying a house. Now, even though the specifics might vary in your situation, I thought it might be useful to look at this a number of different ways so that you might be able to answer the same type of question for yourself. First off, let's recognize that if someone is able to make a $2,500 a month rent payment, their income needs to be at least 3 times that amount. That's typically the criteria that's used in any type of rental. Now, this is total household income. So it could be one individual, a husband, wife, or domestic partner, or even roommates. If all the people living in the house or the apartment or whatever is being rented have sufficient income to hit that 3 times criteria, then they're going to get approved for the rental. Now, on the buy side, first of all, I'm not a mortgage professional, but I can talk in general terms about the types of things that will be looked at before someone can secure a mortgage approval. For a rental, that landlord or property management company is only going to look at the income. They are not going to look at other debts. Whereas on the mortgage side, they will take a look at what else is owed. This is going to include car payments, student loans, credit cards. What's the total amount of money going out for those other debt payments? There's going to be a percentage they look at when you add up the total mortgage payment plus all those other payments. For the most part, if it's in that 30 to 40% range of the total gross income, you're usually going to be okay. But let's say, for this example, that this individual is approved for both a rental and a mortgage in that same dollar amount, $2,500 a month. If they paid $2,500 a month, regardless of whether or not it was the rent payment or the mortgage payment, at the end of the year, that's $30,000. If they were to put $75,000 down on the house and pay $30,000 during the course of the year, and the value of that house were to go down, then they would be losing money, right? Now, my first thought was that this type of question by itself shows me that that person is thinking in terms of investing. The unique thing about a house is it not only satisfies the need for shelter, but it also can be an investment vehicle. So let's break this down and see what we can find out. In order to get to a $2,500 a month payment at a 7% interest rate, you'd probably need to be looking at a house somewhere in the $330,000 price range. That's based on a couple of assumptions. Taxes, $8,000, homeowners insurance, $1,200, and $50 a month in HOA fees. The first question is, can you buy a house for $330,000 in the Austin Metro? The answer is yes. In fact, if you go further out to areas like Lago Vista, Jarrell, Taylor, Elgin, Lockhart, San Marcos, you could get a brand new house. And if that builder was offering any type of incentives with respect to the interest rates, you could even increase your buying power. Now, if one of your must-haves were to be close to the urban core, in order to stay in this price range, you would need to adjust some of your criteria. You could get a condo closer to downtown. Now, it may not be a brand new one in an upscale luxury condo right in the middle of downtown Austin, but you could get a condo in that price range and still be in one of the more desirable, trendy neighborhoods close to downtown. Now, these are the types of questions that begin to reveal whether or not that potential home buyer is really thinking in terms of investing. And here's what I mean. If it's more important to live in a certain area, a certain school district, or have a certain size house than it is to buy a house within your budget, well, you're probably not thinking in terms of a long-term investing strategy. Let's say that you were able to find a house that you would be willing to buy that was within that budget. Comparing that to a rental at $2,500 a month, you would, in both cases, spend $30,000 in a year's time. And if that $30,000 is perceived as an expense, it does, in both cases, provide housing. So in a year's time, you spend $30,000. But what do you have to show for it once that year is up? On the rental side, you wouldn't have anything. That $30,000 truly would have been just an expense, just like groceries or gas. It's consumable. It's gone. It's spent to provide the housing. Now on the buy side, in order to get to that $2,500 a month payment, it required that $75,000 down payment. So at the end of a term, 1 year, 2 years, 5 years, 10 years, whatever, the concern would be whether or not you would be able to recoup that down payment and hopefully make a little bit of money, right? Appreciation. First off, in order to sell a house, you will incur some expenses. Those are usually going to be in the 7 to 8% range. So in order to just break even, in order to get all of your down payment back, you would need to see appreciation that would at least cover those closing costs. Now, in addition to this, you're also making payments on the loan, which is reducing the principal balance. As you can see from these numbers, every year you effectively reduce the amount needed to break even by approximately 1%. Now, don't forget, this is at the 7% interest rate. If interest rates change and you were able to refinance the house, it would be possible to reduce that principal balance even faster. So I believe this shows probably the most important thing to remember when we're talking about a house as an investment, and that is the value of time. As more time goes by, the lower that principal balance will be, which means even if the home value stayed the same, by reducing the principal balance, you're increasing the amount of return you'll see when the house is sold. Now, the real concern is what happens if home values actually go down further than what they are right now. In the rent scenario, you still are out that $30,000. Whereas on the buy side, you have an asset that if you did have to move and you couldn't get what you thought you needed to get for that house, you would have the option of renting it out. And in that scenario, you would put a tenant in the house and that tenant would effectively make the mortgage payment for you. I think that if you run these numbers and consider all the factors, you're going to find out that if somebody's making enough money to pay a $2,500 a month rent payment, there is very few, if any, scenarios where it's going to make more sense to rent rather than buy. One of the biggest obstacles you're going to have to overcome is unlearning some of the things that you've been led to believe that are true. There has been a lot of time and money spent convincing the younger generation that it makes more sense to rent. I think if you were to take some time and dig into that and figure out who's doing this, it's the people who have a vested interest in keeping you as a renter. One thing you might consider is to talk to some people out there in their 60s and 70s. Be sure to talk to some of those who own their own home and those who have rented their whole life. They may not tell you directly, but you could probably tell by their lifestyle what their net worth looks like. The next question is, what do you want the quality of your life to be when you get to be that age? I get emails, texts, and phone calls almost every day from people who are thinking about buying or selling real estate here in the Austin area, and I would love to help you out too. All of my contact information is in the video description. So don't be shy. Let's make your real estate dreams come true.